my first principles, how I look at investments. The first lesson of history is that people don't learn about history. Jim Rogers. Jim Rogers is a billionaire investor who has been around for decades. He is one of the most successful commodities traders and investors of all time. He also has another quote he is famous for, among many, many others, regarding how anyone else can be successful. If you want to be a great investor, study history and philosophy. He's a great man to listen to for advice on how to keep emotions in check and focus on what is truly important in investing. And here's a whole list of books he has written about investing. And what better way to become a successful, wealthy person, an investor, by listening to some of the greatest investors in the world and reading their work. He's among hundreds and thousands of other investors who are billionaires, multimillionaires, decamillionaires that have written books about how to be just like them. Investing is a lifelong practice of building your house through bricks, not straw or sticks, as Robert Kiyosaki points out in his 2020 book, Who Stole My Pension, which is a phenomenal book if you have not read it. It is really, truly eye-opening, and he talks about building a great foundation and truly building on a solid rock, like they speak about in the Bible, like Jesus speaks about in the Bible. I don't believe in letting someone else determine my future, a company, another investor, some other random group, or especially the government. My heuristics, my mental rules of thumb when I'm looking at and analyzing investments, I will use uniform position sizes, meaning if I don't have an amazing grasp on a concept, I'll put uniform investments into a number of different trades and watch them closely. I actually did this in crypto 4 or 5 years ago. I know it was at least 4 years ago. I got into crypto, and really about the 2017 top last time was when I got interested in it, piqued my interest, and I would use uniform position sizing. So I'd take an amount I wanted to invest, and I would split it up evenly through a bunch of different projects because I didn't know exactly what was going to pan out and what didn't. And that's diversification. It's another way to say it. And Warren Buffett will say, "Hey, I want a couple investments, and I'm going to know every single thing about it, and I'm going to go all in on it and watch that basket very closely." Where if you don't have a lot of information or not a lot of experience, you might want to be a little more uniform in your position sizing and moving the same amount throughout because you're not sure what's going to play out. And the more I've grown in my study, and really crossing that 50 to 100 hour mark of the crypto community and really Bitcoin, I have actually gotten rid of all my altcoins, and I have a little bit of that stake still in Ethereum actually, and I can't get it out right now because I don't even know. I staked it a year and a half ago or something like that, and that's right when my Bitcoin really went maximalist, I guess, as I call it, and I really the blinders came off, the scales fell from my eyes, and I realized, oh my goodness, it's Bitcoin, nothing else, because it's freedom. Everything clicked for me, and realized this was the way out. Bitcoin was the path out for humanity, away from central bankers, away from centralization, away from all of the greed that's going on and the anti-free markets that are going on. It is true system with rules that are set in stone in code and cannot be changed, cannot be screwed with, cannot be messed with by the next president, by the next central banker, etc. So that's where I use that uniform position sizing, and then I eventually got out of them, but it did pay off actually. And again, that's why you want to use that uniform position sizing if you don't have a ton of experience or a really good grasp on a place where I'm not the best commodities trader in the world, or investor, I should say. Jim Rogers is probably the best in the world. However, I think that's going to be a great class going forward. But I don't have all the experience in the world in it. I have a lot of knowledge in Bitcoin. I've got a lot of knowledge in real estate. But I don't study stocks all day like Warren Buffett does in those companies. And I don't study commodities all day. I know gold and silver are unbelievable. But I don't know about uranium like I should. I don't know about the wheat, indexes and oil and all that. I'm not expert in that. So if you go in and take some cash there, you might want to go. I might uniform position size, with 5% of my cash or something, and go position size it into a bunch of different investments to see, and then really kind of watch them. So that's how I look at it. And I have bigger position sizes in Bitcoin and real estate, things like that, things that I know I am expert in, I know extremely well. I go a lot more in, if that makes sense. In saying that, live to fight another day. I don't want to get caught up trying to win everything back on one investment or one trade. Just like you don't want to be gambling like you're at the casino and saying, oh, hey, I just bet on red and now it hit black, and I'm just going to go double down and keep doubling down. You don't want to do that. You want to use a position sizing to not max out your portfolio, and you want to use those percentages to say, what, I'm only going to lose up to 1% of this trade. Using if you're trading, which again I really don't trade, but if you're trading in the stock market, you want to use stop losses and limit orders and things like that. You want to make sure, probably, things I've read again are limiting in and buying on limit order and then selling at a market order. You want to know those things before you're going in the market. But again, I'm not expert at that, so I don't trade. I'm an investor. I'm a long-term macro investor. These are just my mental rules of thumb I try to look at. I like to hedge and invest in tranches. So taking a half or a quarter or a sixth and splitting those up and saying, hey, if I have X amount of cash, I want to split that up into quarters, and I'm going to put a little bit here the first quarter, and then maybe another month later, just kind of watching it, and put in the second tranche and the third tranche. So you're kind of hopefully catching bottoms and catching tops, because we're never going to catch the exact bottom or tops. And then go the other way of the herd if possible. This is another really important one. The herd is generally going the wrong way. That's almost always how it plays out. And this is true in life and in investing. Buy panic, sell hysteria. It's another one. And that's another Jim Rogers quote, actually. So as Warren Buffett says here, we want to invest and be greedy during a fire sale when everyone's running away. Kind of like right now when there's a lot of great stock companies out there. There's, Bitcoin is being crushed. These are times that you back up the truck. And for some reason, human beings, we will run to the store to get food or get clothes. There's a sale for makeup or, for sports apparel, whatever it is. And people will run there, line up, sit in line for a video game and wait for the sale. But when it comes to their wealth and their assets, building their balance sheet, they'll just run. Everyone just starts running away the other direction. So that falls right into our next one, which is keeping our emotions in check, checking them at the door. This is so incredibly important. In knowing these two quotes right here, buy panic and sell hysteria. When things are just too good to be true, you want to sell those times, and you want to buy times when people are panicking. We want to be fearful when others are greedy, and greedy when others are fearful. We have to know those. We have to keep all those emotions in check. Your EQ, your emotional intelligence, will be the most important thing. I've read many, many books about your emotions and when you're investing, and you have to keep those in check, or else you're going to make poor decisions and it's going to cost you. You want to be able to track these things. So one of my other ones is keeping a journal to track your investments. This is another thing that you really want to track what's going on. Again, if you're a trader, extremely important. Again, I don't trade, whether it's real estate or Bitcoin or gold, silver. I invest for the long term. I want to be able to invest long term, lend against my assets, pay little to zero tax, because I'm using the tax code, tax laws to my advantage, and they're incentivizing us to do those things. So I want to pay as little as tax as possible because I want to partner with the government, actually. And Tom Wheelwright talks about that a ton, one of Robert Kiyosaki's Rich Dad advisors. And then again, we want to track our financial statements. We have to track our statements, the income statement, balance sheet, cash flow statement. These are incredibly important to track where you're going and where you've been and where you're going. I track these weekly, and I have them over months and years, so I can go back and look and see how we've progressed and where we're going. I have ratios built into the Excel sheet, so I can see how certain investments, I'll play with them. I'll go in and see what exactly is going on. Again, we'll probably show this in our paid newsletter here eventually. I'll show how I mess with my portfolio and how I'll put in fake investments to see how it changes the ratios, see what would happen if I go this route, or what would happen if I go that route. And I think that's extremely important to kind of visualize what you're doing or what you're about to do in the future, kind of playing a game with it, thought experiments. And then some thoughts I specifically think about in certain asset classes, like real estate and business. A lot of times you really want to focus on some of the main questions, which are who are the financing or the financiers? What does the financing look like? Is it seller financing? Is it bank financing? What are we working with here? Who are my partners? What people am I partnering with? It could be the people on the other side of the aisle, but it could be, again, it's your lenders as well. It's your investors. It's your property managers. It is your contractors, it's everyone in on the deal, investing with you and doing the deal with you. And then again, who's the owner, who's the management? So again, if you're taking over a business or you are taking over a multifamily property, who's managing that? Who's the property manager? Who's the manager of the company? Whatever it is, it could be a stock, a business, real estate portfolio. Who are managing? Who's the one owning and managing what's going on? What am I owning? And then stocks and commodities, again, some similar kind of questions. Some of these have to do with both, and some of them are just one of them. But does it have a centralized server farm that can be shut off with one switch? That's a good crypto one. Again, I'm just a Bitcoin believer. There could be some other projects that last over time potentially. I believe Corey Clipstein said the other day that only 3 coins have hit all-time highs after basically coming out of the market against Bitcoin ever. Only 3 of them have hit an all-time high after 2017, I believe, just once. So it's just out of 20,000 coins. So again, I'm a believer in Bitcoin for the fundamentals, but also the charting, the technicals, which we'll talk about here in a second. And so these are questions to ask yourself. If you find yourself getting sucked into altcoins or stock or something like that, again, can these be shut off? Who stands to benefit from the project? Who's incentivized by this project? What's the incentive for me? What's the incentive for the owners? Who's involved? Does it have a marketing department? Because if it does, it's not decentralized. Does it have a pre-mine? Was there an ICO or IPO with a stock? Are there holders of this before I got in? Or am I the initial person? Am I holding the bag for someone else? Am I going to be the one that's going to get hoodwinked here? Or am I the one that's standing to make out? Does this investment hurt others? Does the crypto or the stock of the company, does it hurt others if I am investing in this? Is it an ethical company? I believe in being ethical. I don't want to own McDonald's, even though they're, give you a lot of great stuff. I don't want to own them. So, and is it proof of stake? That's another one. If it's in the crypto world, if so, it's a non-starter, as those with most coins control the rules, like the fiat world. Proof of stake just means that those with the most coins are staking. They have the most voting power in the consensus and the protocol, and they can reverse things. Unlike proof of work, Bitcoin is amazing because it's proof of work. The person with 1 million coins, Satoshi's wallet, or hundreds of thousands, or there are a couple of them, like Michael Saylor, he has no more control of the system than someone with 0.0001 Bitcoin. That's the beauty of proof of work and the decentralized nature of Bitcoin. Is it is completely out of the hands of everybody and in everyone's hands all at the same time. No one has more control over the other. I mean, it's a triangle. It's a trifecta. You have the nodes, the miners, and the owners of the Bitcoin. Those 3 people control the system really as a conglomerate and all together at once, and none at the same time. Unlike proof of stake, which is controlled by the people that have, and those that have not, well, good luck. I hope you don't get rug pulled, and we see exchanges and altcoins getting blown up all the time, especially lately. So this is how my mind sees investments and how I try to position myself and mitigate risk. Remember that word, risk. Risk is huge. As Andy Tanner, Rich Dad Advisor with Robert Kiyosaki says, the 4 pillars are important to know for any investment. The fundamentals, number 1. The technicals, number 2. Number 3 is cash flow, and number 4 is risk management. So the fundamentals are the financial statements, looking at the health of the company. The technicals are the charting, looking at the charts, where is it at in its patterns. 3 is cash flow. Is cash pouring out of the company, or is it coming into the company? Is it profitable? And then number 4 is risk management. And you can do these all on yourself as a personal entity, your own business. You yourself, your family are a business. Risk management, probably the most important of all. As many high-level investors, Andy Tanner and many others will say, this is the most important. Insurance, hedging. If it's a trader in the stock market, maybe you're putting the limit orders in, stop orders. Like I said, the stop losses. You're buying calls and puts and selling calls and puts against your investments to hedge yourself, and to it's like playing blackjack, and you buy insurance when the dealer flips an ace, and you're just hedging. That's what it is. And great investors hedge. You buy insurance on your car, you buy insurance on your property. Why wouldn't you do it with your stocks? And that's what Bitcoin is. Bitcoin is insurance, in essence. It is default insurance of the entire system, and it's imploding. So that's literally by nature what Bitcoin is. And as Warren Buffett says, again, we go back and forth with Warren. We're love-hate with Warren. Warren's a great investor. At the same time, he says a lot of amazing things, and he says a lot of stupid things, in my opinion. But one of his great quotes is, number 1, the 2 rules of investing: don't lose money. And number 2, see rule number 1. And Rich Dad always said, the poor and the middle class focus on paychecks. The wealthy focus on buying or creating assets for their balance sheet. I have chosen my focus. What is yours? Stay strong. And remember, be careful. The advice, the people, and the info your subconscious takes in and accepts is real. We've talked about this a lot lately, but again, remember, whether it's in the political world, in real life, investing, wealth, financial, your boss, the people you work with, the people you work for, the people that you lead, your family, your friends, whoever it is, this is the most important real estate, the 6 inches between your ears. Remember that. And remember, you are the gatekeepers of what comes into your conscious mind and what your subconscious mind accepts as real. So please stay strong. If you like this content, please subscribe, share with anyone you think would hate it and you want to bug them, or maybe someone you think would love it and they would get something from this. Please share. Please like, dislike, so that way I have feedback so I know how to make better content. Comment what you did or did not like. But again, please like and subscribe here on our blog and on our YouTube channel as well. We look forward to seeing you on the next one. Oh, and time is the most valuable asset. Time is our most valuable asset. Please do not waste it. Thank you for sharing with us. We'll see you on the next one.